Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Lattice Semiconductor CORP quarterly report. Lattice Semiconductor Corporation offers a diverse range of products and services across various industries. The company's primary offerings include field programmable gate arrays, FPGAs, such as Lattice Nexus, Avant, and Certus design software like Lattice Radiant, Propel, Automate, mVision, Aran, SensAI, Sentry, and Drive Edge AI application software. Glance video connectivity application, specific standard products, standard IP and IP core, licensing, patent monetization, and IP services. These products cater to the needs of various markets, including communications and computing, industrial and automotive, and consumer. The stock price of Lattice Semiconductor Corp has increased by 23.54% over the past year due to a combination of factors. Analyst upgrades and AI sector growth have been significant contributors, with Needham raising its price target on LSCC shares from $70 to $80 in September 2025. The anticipation of interest rate cuts also boosted investor sentiment across the technology sector. Additionally, Lattice Semiconductor's positive financial outlook and recovery have contributed to the increase in stock price. The company's CEO expressed optimism about a U-shaped recovery in 2025, with revenue growth targets of 15% to 20% for 2026 and beyond. The launch of innovative products such as the Lattice Nexus 2 FPGA platform and the Mach-X AFAVEN-X TDQ have also received industry recognition, further boosting investor confidence. Overall, a combination of positive analyst sentiment, strategic product developments, favorable macroeconomic trends, and strong corporate performance have driven the increase in LSCC stock price over the past year. The primary drivers of revenue growth or decline are largely influenced by external factors and market trends. On the growth side, sales to distributors, licenses and royalties from HDMI Consortium, and strong demand in data center applications have contributed to revenue increases. Conversely, softer end-market demand, inventory normalization, adverse macroeconomic conditions, such as tariffs and trade disruptions, rising inflation, and labor shortages, have led to revenue declines. These factors highlight the importance of adapting to changing market conditions to maintain revenue stability. Net income experienced a contradictory trend between two periods. Initially, it decreased, as stated on page 20. However, by the end of the first 9 months of FY 2025, net income increased by $22 million compared to FY 2024. Profit margins also underwent changes. They initially decreased due to higher stock-based compensation and alterations in product mix, according to page 20. Meanwhile, adjusted EBITDA saw an increase in Q3 2025, but a decrease for the first 9 months of fiscal 2025, as noted on page 23. The company is generating positive operating cash flow, a significant improvement from previous years. For the first 9 months of fiscal 2025, the company's operating activities provided $117.5 million in cash, a notable increase of $22 million compared to the same period in fiscal 2024. This upward trend indicates a strengthening financial position for the company. Management is optimistic about the company's outlook, citing growth in AI-related revenue due to a strong pipeline of design wins. The focus remains on delivering innovative products with low power consumption, small size, and ease of use. To achieve this, management plans to invest in research and development, which may lead to increased expenses but will eventually decline as a percentage of revenue. Additionally, the company is open to exploring acquisition opportunities to expand its offerings. However, management acknowledges uncertainty surrounding market volatility and other external factors that could impact liquidity and working capital needs. The company has a history of buying back its own shares as part of its capital management strategy. In fiscal 2025, it repurchased approximately 1.7 million shares for $100.9 million under the 2025 repurchase program. This demonstrates the company's commitment to returning value to shareholders through share buybacks rather than dividend payments. Concerns about inventory buildup and supply chain disruption. The financial summary highlights two key concerns that may impact the company's operations. Firstly, there are worries about supply chain disruption due to tariffs and trade actions, which could reduce demand for products in certain markets. Additionally, an ongoing investigation into semiconductor imports may lead to further tariffs or restrictions. Furthermore, there is a mention of potential excess inventory buildup in industrial and automotive end markets as customers continue to normalize their inventory levels. These concerns suggest that the company may face challenges in managing its supply chain and inventory levels, which could have significant implications for its business operations. That concludes the financial summary for Lattice Semiconductor Corp. Feel free to comment below, and I will be happy to answer them when possible.